Hey guys, it is Mark Coe for the 23rd of October. Just want to take a look at what we have movement wise in markets today, and really kind of the big volatility was kept in the E-minis. So let's kind of focus on E-minis and talk about that and what we had coming into the day and kind of revisiting what we were looking at to start the week. So to start the week, the idea was 45 to 50 was a very key support area. And again, here's your 45 to 50 area. And you can see this again was from Monday. This is your Tuesday chart. So what happens at that 45 to 50 area? Well, the market takes it lower, so there's your big breakout. So right at that stage, you know it's no more focus on buying once that level gave way. The selling early Asia and in Europe, and then we come into U.S. session. So let's think about what we have to walk into U.S. session this morning. We're sitting around 27.10, 27.15. Most recent lows down in that area were 27.12. The important part I think to think about is what levels are down here, what's sitting here. So I'm sitting here right now on your screen with a 10-minute chart of the E-minis, which is something shorter term. A lot of people will look at intraday, scalp minded, and think, okay, I need something fast chart wise. But the key, what I'm grabbing, and I'll show you to you, my analysis when I walk in this morning, E-minis, I'm looking at support at 27.10. 96, and then a third support level right here at 83, right? And it was clearly on a sell bias walking into that U.S. session. But the focus is when you walk into that U.S. session, you're sitting down here. You're sitting at the bottoms. You're not sitting up at the top at a beautiful level to sell. You're sitting at the bottom. The idea for me in the short term this morning, especially at the 9:30 open, was playing against this 27.10 area. And I said to the folks in the room, I said, you probably can look at a good 10 to 12 points, and if you keep the risk tight, and it was able to do that. It pulled back to 27.11, traded up to 27.23. Now that's real scalp minded, but again, that's 12 S&P points. It's 600 quick dollars to take you back to this breakdown edge. That is counter trend. That's counter trend. The real meat of the movement was obviously the move higher for the rest of the day. But let's think about what goes on at the bottom and why this bottom is important. So I mentioned a couple areas down here, 26, 96, and 83. They're big levels of support. So the key becomes your preparation. What are you doing in advance? How do you know to be looking at these levels as potential buy areas? Well, you have to get back to something bigger picture. Daily, weekly, 4-hour. You have to really know what's going on at this zone. So I'm quite certain down 30, 40 handles overnight, and I didn't watch today, but all the financial broadcaster geniuses were screaming, kind of a worrisome note. Meanwhile, this is what we traded into. And let me just show you what happened, what we traded into. So talk about the market can do three things. It can mark prices higher, mark prices lower, or it can consolidate. And all I'm looking for is bottom edges of consolidation. So in this zone, when you break below 27.5 in the E-minis, right? So here's your 27.5 level. When you break below that, now your focus becomes, well, what is your next bottom edge? This was all marking of price higher. This is now a consolidative bottom edge. So that's all I'm focused on in terms of price action. So consequently, you have this area marked as a buy zone, buy level, and all the market did today was trade back into it. So it was quite a beautiful thing, very similar to what it did a week ago, or just over a week ago, with that move down to 27.12. Again, this is what it touched. It touched the lows of this move, of this candle. That's what it did, and then it rallied. Did the same thing today. So what that's showing you, down at this 27, 27, 10, 15 area, the market does not want to stay offered right now. That thing, it can change, but right now there are buyers sitting there. And all they did was challenge the bottom edge of it this morning. So knowing that this is the zone you're playing into, all the people in my room and in my environment are not looking to be sellers in that area, and quite the opposite. Even though the bias may be to the sell side, on bottom edges, the only trades that you can look for are long trades. That's the only trades you can look for, right? You can only look for long trades on those biases. So on that edge, that's the only thing you can look for. So you're looking for buy trade. Now, what constitutes a buy trade? A trade into a level holding, short-term counts, things like that. So there are lots of opportunities to look. And again, forget the rally from 93 back up to 96. sorry, 96 to 10, the move back above 10. This should still have been looked at as a type of sell edge, but once you close back above that and maintain closes, things are different now. You're not offered below this 27.10. Same thing at the quarter, above 27 and a quarter, taps back to it. So this is a pretty key little section that turned the tide here for the E-minis. And so, again, it was a big move. And where did it take it back to? It took back all the selling that occurred in Asia. That's what it just took back. I mean, that's where the selling, the breakdown occurred. It literally traded level, a new level on the bottom, back to the same level. And it was a big, big run. It was a big, big run. So the key becomes focus on those areas. What can you get from them? And that's where your focus should be, right? Those areas. And you're a buyer on dips and a seller on rallies. You're not a seller on new lows. That's not the way we trade this approach. So again, guys, for the 23rd of October, it's Mark Coe. Cheers. I hope everybody had a profitable day, and we'll check things out tomorrow.